First red and first green day is an extremely powerful signal as long as you understand the characteristics that go into it and how to trade it on day C over here on the right. So that's everything we're going to be going over in this video, but make sure that you're subscribed and have the bell icon clicked so that way you don't miss next week's video on the traps based off of first red and first green, because those are also playbook opportunities that can be extremely lucrative. So what is a first red and a first green day? Number one, first red, we're going to start with that one first, and that is starting over here with day A. This is going to be your large range pumping day. Then you come over to day B, which is the day that opens, trades above the high or attempts to trade above the high, and then closes at its lows in the afternoon or at the end of the day. Now, this is going to be your first red day, this day B over here, and that's going to be important later on. So on day C, that's the day that we're looking to actually execute a trade as long as it presents correctly in our session. Now, I could be looking for a lower low to be put in place. I could be looking for 3 levels of rise coming off of the previous day's low. I could be looking for 3 peaks patterns. It really depends on which session that I am trading. I personally trade the New York session, so trying to find trades around that 9:30 time frame for indexes, gold, and oil, but sometimes things move a little bit earlier. So just for example, here is a really solid first red day where we have our previous day's low. They triggered previous day's low over here, making that lower low, and then coming back in a very clean 3 push pattern, 1, 2, and 3 with the engulfment for the entry, which was picture perfect. And the great thing is, first green day is exactly the same as first red day, just flipped over. So you have your large dumping day for day A, plus B, which is going to be your day that opens, attempts to trade below the low and fails, closing near its highs or making its highs in the afternoon above the opening price. So that's A plus B. And then we come over to C, where we're going to frame our day, looking for that buy low opportunity. 3 levels of drop. It could be a low of day, low of session, something along those lines. And very similar to the previous trade that we just looked at, they trigger previous day's high, making the higher high, and then pulling back in 3 pushes. Leg 1 down, leg 2 down, leg 3 down, engulfment for the entry, and of course the continuation outside of the previous day's range for an expansion of the range. Now, if you're worried about the entry, don't worry, because I do have entry slides later on, but we're going to go through some common questions about first red and first green day, and hopefully I can answer some of those questions now. But if you do have more questions, please let me know down in the comments below, and I will do my best to answer them. So what if day B is also an inside day? So you could have day A, which is supposed to be your dumping day, or for first red day, your pumping day. But what happens when day B turns into a first green day, but it's also an inside bar, so they don't hit the previous day's high or the previous day's low? In this case, I'm going to trade it exactly the same, and I'm going to be very okay, especially for first green day, if they trigger previous day's low. Now for first red day, if they trigger previous day's high, that is okay as well. So in this case, you have your inside bar or inside day, first green day, that has triggered previous day's high. So they've made that higher high, and then it trades back down into the previous day's low in 3 legs. There's leg 1, there's leg 2, dumps down into in 4, leg 3 with the engulfment for the entry, and then the range expansion to go higher. Perfect. Now, if you look at this week, it is currently January 17th, 2025. If you look at this week for what the week has actually done, there's been a lot of signal days that on the next day have just kind of gone the opposite direction, where you get a first red day and then it goes vertical to the upside, or you get a first green day and it goes vertical to the downside. And that's what I'm going to cover in next week's video. But just to hit it on the surface right now, so why is a first red or a first green day go in the wrong direction on day C? Hey, I got a first red day. What's going on? Why did it go up the next day? Well, you could be, or probably are, in some kind of breakout pullback scenario. So in this case, where we have our large range pumping day, which was also a breakout day. They broke out a previous day's high of Thursday. So this is breakout. And then you have Monday, opening range for the week. You get a first red day and you're like, hey, time to look for the trade to go down tomorrow. It pumps back up and you're like, all right, time for it to break down. But then it just never breaks down, stays inside of this rectangle, and in fact begins to break out to the upside. So this is, if I were to draw this like this, you would have your break of trend, your sideways consolidation, and your vertical move to continue with the breakout, right? So this is breakout, looking at the pullback, leg 1, leg 2, leg 3, ending in 1, 2, 3. This is a really good breakout pullback template. And if you look at this and then go look at this week, you'll also notice the same things, or the same exact kind of template. Focus on that previous day's high or previous day's low level. Look for that breakout. look at the little pause day and how they've pulled back, and then study how this day actually went vertical, because that is going to be a part of the playbook where I've got my closing price and I'm looking to get trades off of that closing price to go in line with the original breakout. So what are my big day C takeaways? The day that I'm looking to take the trade, what am I actually looking for to help me confirm that this is setting up appropriately for a first red or a first green day? Not for the trap trade, but for the actual first red or first green day. I am looking for short squeeze and long squeeze patterns. A short squeeze pattern would be a higher high, a higher low engulfment for the entry. A long squeeze pattern would be a lower low, lower high engulfment for the entry. Basically squeezing people out, and it's ready for an explosion in a direction. It's built up momentum. It is built up people trying to trade in the wrong direction in a pullback, and then they start to get squeezed out, and that's why it goes vertical. That's why I'm trying to get in at that area of the chart. So I'm looking at structure. I have a very objective way of looking at structure. Please go watch the structure videos on my channel, and I will explain the rules to you. Timing, it has to be in my session, and I want to be getting in on the first pullback in my session. So for example, this higher high, yesterday was first green day. I'm trying to go long. I want to go long, but then it makes a lower low in my session and pulls back. So this is 930. We've made this higher high. I don't have any engulfment to go long. So if you're looking at this and thinking, well, what if I went long over here or over here? This is all not in the session. So, if this did happen in the session, then I just would have got stopped out, and that's fine. But I'm going to be watching this. So we get a higher high and they start to pull back leg 1, leg 2, leg 3. And you're thinking, okay, it's time to go long. 930 opens up. The bar doesn't close. I have no engulfment of the low bear candle, so I have no entry. And then it goes vertical to the downside and starts making lower lows. So this lower low in a pullback 1, 2, and a very weak third gives me no reason, no opportunity to go long, nothing a part of my entry criteria. And of course, this is just one example. And there are times where I get faked out like this and get stopped out, and that's no big deal. It's going to happen. You cannot avoid 100% of loss. However, the best thing for me to do is just say, this is exactly what I'm looking for, have confidence in that, and then take the trade when it presents. And nothing over here has presented in a way that I should be executing a trade. And you might be wondering, well, what does buy low actually mean? You can say that all the time, buy low. Am I trying to buy the low of the year, the whatever, right? But buying low to me is going to mean within the current day's range, I'm looking for 3 levels of drop, maybe coming off of previous day's high. Maybe I'm looking for 3 levels of rise coming off of previous day's low. Maybe I'm looking for 3 levels of rise or fall coming off of the current high of day or the current low of day. I could also be just waiting for the low of the session to get engulfed and things like that. So looking over here, what does buy low mean? Low of current day, low of previous day, low of current session. And then details that you can look for within the current day. If I'm looking to buy low, I would be looking at the structure. Again, if I'm looking to go long, I have to see some kind of higher high. We have to be in a higher high, higher low sort of scenario. The time of day is at 9:30, specifically for indexes gold and oil. For currency pairs, of course, you can find trades a little bit earlier. And I'm only trading that 8 a.m. until 11 a.m. window. Some people trade in the afternoon. That's perfectly fine. You might find these trades in the afternoon. But I just don't personally look for them. So I'm looking for the time of day and then 3 levels of drop as well. So if you notice, this is the previous day's high. That was my signal day. They've pulled off of that high. If I'm looking for a breakout pullback sort of scenario, which is very likely in a lot of cases, you can measure down from that previous day's high 3 levels. So 3 levels on an index gold or oil is typically going to be at least 50 pips. So measuring from double zeros down to 50, and then from 50 down to zeros, and so forth. And then sometimes, in a lot of cases, because these are such volatile pairs, you can also measure in boxes of 100. So in this case, we've got box 1, 100, box 2, 100, box 3, 100, failing to go lower outside of that 3rd level of drop, putting in a peak formation below double zeros, and then pulling back up into the range, making a higher high, pulling back in 3 pushes, giving a double bottom peak formation low and an engulfment at 9:30. This is picture perfect because everything is lined up. Structure, 2 thumbs up. 3 levels of drop, 2 thumbs up. Timing, 2 thumbs up. Proper time of day, this is perfect. Engulfment, pin hammer, and follow through back towards the previous day's high. If you don't want to hold for the previous day's high because you're jumpy and you just want to get in and get out, well, that's fine. You can measure from the newly formed high down to the newly formed high or low and use a range expansion tool and go from here to here and measure equal distance. So from, what was this, 50 down to about 50 is 100 pips. So we can just measure up 100 pips from here, and we could take this trade back up to about 50 right here, and that would still be acceptable. Now, let's talk about entry criteria. What am I actually waiting for in the market once these signals present, and once I believe it is starting to set up? How do I even know that it is starting to set up? And that's going to be the first part of my entry criteria, which is the signal day. I know, hey, yesterday was first red, yesterday was first green. Is it going to be a trap? Should be running through my mind, and I should have the closing price up there on the screen in watching that. But the next thing that I'm looking at is structure. Do I have a higher high if it's first green day? Do I have a lower low? That higher high or that lower low, either on the 15 or the 5-minute chart, is going to be the thing that tells me, hey, this is something you need to be watching. This is something that could be setting up for your trade in your session. You need to be watching this. Next, I need 3 pushes back into the trend. Either a lower low and 3 pushes back into the high, or a higher high and 3 pushes back down into the low. And if you're interested about 3 pushes and why I wait for this, I've got plenty of videos on my channel about that. But those 3 pushes is helping me gauge the pullback after the new extreme has been formed, helping me to identify where the market is going to trap the wrong side. So if I was trying to go long, it starts pulling back to the downside in 3 pushes. Who is trapped and where and why? So that's going to help me with my entry as well. And then the next step, after I get my 3rd push, I don't know that it's going to be my 3rd push until I have an engulfment, and then I can look and say, hey, that is a really good 3 push pattern. That is an engulfment. Now I'm ready to get into the market. I'm ready to enter. So after I get my engulfment, sometimes I will go down to even lower time frames. If the bar is very, very wide like this, I'll go down to like a 1-minute chart and try and get in on a pullback. But otherwise, I am free to get in. I can put a buy stop 1 tick above this bar and allow it to trade through and hopefully pull me in the right direction. So this is either to be taken on the 5-minute or the 1-minute chart, depending on your preference. It really depends on the situation. For a really wide bar like this, I would have used a 1. But for pretty much any other situation, I am totally okay with using the 5. Now, it's important to say that not every first red or first green day should be created equally, and there are going to be ones that you enjoy more or less than the others, and yet you probably can recognize a bit better based off of the pattern. So for example, whenever I have a first red or a first green day, and it's like the first week of breakouts, right? So for example, we have a previous week's high. This is the first week. The market was going down, and then we get a breakout to the upside of that week, and then the new week begins, and we have a large dump coming off of Friday into Monday that closes in breakout and then fails on Tuesday. So now we have kind of a peak formation low, peak formation high, day 1 first green day on this Tuesday over here. This is one of my favorites because it's in breakout already to the upside for the weeks. The weeks are in breakout to the upside, and now I have a 3-day template in line with those weeks of breakouts. And a lot of times I have found that they are much more reliable depending on the time. So in this case, even here where this is my favorite template, I just want to point out that the trade that I wanted to take would have came in the London session. And then they break out and they come up in a big bar 1, pause, 2, 3, and then there's a massive reversal trade coming off the high of the current week on Wednesday over here, coming off previous day's high in the New York session. So I could have participated in this trade, but not this trade, even though this was a first green day. It's all about timing and the levels and where you're at and what things are doing. This is obviously a higher time frame, but on a lower time frame, there would have been a lower low and a pullback for me to get in back down to here. Not expecting much because trade go higher. We're making higher highs and higher lows. They made another higher high, maybe expecting a pullback back down into the breakout traders, but not expecting the whole entire world out of this thing because that's just not how it's set up. So that last scenario was considered more of a trend trade because it was in line with the week of breakout. And you can even find 3-day templates like this that are in line with daily breakouts. So you would have like a breakout and then maybe like a first red day and then a first green day and then the explosion back up through the high of the week. That would be a trend trade in line with those breakouts. But there's going to be instances where you run into very overextended markets as well, and those are going to be excellent opportunities for reversal trades. So if you have a market that has been going up higher and higher and higher, and then you finally get your lower low, and you get your first red day and everything like that, that might give you an opportunity to look for these reversal trades. So we get our overextended market over the course of who knows how many weeks, 2, 3, 4, 5, a day that gives you this first red day scenario. Now, again, I have no idea whether or not it's going to play out over here, but I would refer you back to what am I looking for on day C. So now we come to day C and I see, hey, they've triggered the previous day's low, telling me, hey, there's a lower low in the market, and I can measure from the low of the current day, since they've extended the previous day's low to the downside, and measure up 3 levels. So we get a peak formation being put in place here at double zeros, and then we get 3 levels of 50, 50, 50, and 50, 150 pips of rise. I don't know that it's going to stop there until I get a peak formation high put in place. So we trade back up into the high, 3 levels. First push to the high, second push to the high, giving us the double top and the engulfment, and that is going to be my entry every single time because lower low and then 3 legs back up. Push 1, push 2, push 3, and then while we're at the high, we're at the levels, we're at the high of the day, leg 1, leg 2, leg 3, into the high, and it breaks down. All right, so giving us that peak formation. That is perfect, and I would just take it back down to and through the low of the current day. I highly encourage you, don't take my word for it. Go back to your charts, look at the past couple of weeks, and then find the first red and first green days and look and see, was it based off of breakouts? Was it trend trades? Was it overextended markets? Where was the entry? Was there a breakdown and 3 pushes back to the high, or a breakout and 3 pushes back down into the low? And then let me know down in the comments below if you could find these trades and which pairs they were on and the date, so that way I can go back and find them too. Ladies and gentlemen, I hope you've enjoyed this video, and I will see you in the next one. Bye-bye.